Hey, so I'm trying to get this one out to you real quick. And I know I've been making a lot of videos on MicroStrategy for the last couple of days. Bitcoin happened to go almost to $100,000 and pulled back to about $97,000 this morning. The market just opened a few minutes ago. In fact, it's about, let's see what time it is here. It's about 10 o'clock. And so I'm trying to get in, just give you a quick video on what I see. I'm showing you the 1 minute chart. I don't normally look at 1 minute charts, but this MicroStrategy breaks all the rules as far as what I normally look at. So I want to show you what has happened this morning. So we went up overnight to a high of about 441. And then we just started to sell off all morning. Sell off. It's been the last half hour it's sold off. And it sold off, as you can see, to about 383. Okay, so now we went down to 383 and it bounced all the way up to about 407, 408, something like that. So there's an opportunity to make some money for this week if you want to sell puts. Now let me explain what selling a put is. First of all, there's two kinds of options, a call option and a put option. A call option is when you want something to go up, you buy an option and hope it goes up, and you can buy it at a predetermined price before a predetermined date. A stock is at 100, you think it's going to go to 110, you give somebody $1 and you say, well, I think it's going to go to 110. If it does, anything over 110, I get the opportunity to buy it from you. So you're hoping it goes to 111, right? Because if it goes to 112, you basically double your money. Your dollar turns into $2. But that's buying an option. Doing a put is the opposite, kind of ish. It's like the Darth Vader of trading. It's the dark side. And so what you're doing is you're basically hoping that it's going to go down. So if a stock is at 100 and you think it's going to go to 95, you might give somebody $1, and if it goes, at a strike price of 95, and if it goes down to 95, then you make money under 95, dollar for dollar. I think a lot of those things expire worthless, so I'd rather be on the other side of selling calls and the other side of selling puts. So today I'm just going to talk to you real quick about selling a put option. So you could see the action here, and you could see that it got down to about 385. So to me, that's a bit of a support level. Nice bounce there. I think it'll probably go back and test it. I mean, that's what these things kind of do. They go down, they test them again to see if they're for real, and it may go down even more. If it does, that's fine. MicroStrategy a few days ago was at 543, and today is at 400, right? So if you like MicroStrategy, if you liked the reasons to buy it all the way up in here, then you're going to love it here even more, right? And so we're looking at that action. Now, I want you to be really careful, right? This is a stock that can just burn you. And that's why I like to sell options. You sell options, you sell puts, because you think that the stock might go down, and if it does, you're basically getting the stock on sale. The negative of that is you're buying a stock on weakness. If the stock keeps going down and you sold a put and it hits your strike price, you're going to end up buying the stock on the way down. And you say, well, fine, Mark, I buy the stock on the way down, but I wanted it anyway. And instead of buying it at 400, I'm going to get it at some price cheaper. So let's look at the options. Here are the options. These are the calls over here. We're going to zoom in here on the puts, okay? So what I'm going to do, or I want to do, or I would suggest that you look at doing, if you want to look at it and start your research here. Don't do it because I say it, but do it because right here I go to like a 30 delta, and I say, well, the 30 delta is a 365. The stock has to go down this week. These are this week's options. There are 4 days, 4.5 days left. If it goes down to 365, you end up with 100 shares for every contract that you have sold. So you're going to sell somebody the option to make you buy MicroStrategy at 365. And you go, well, shoot, if I buy it at 365 and it's worth 400, that's a good deal. Okay, then you have to decide. If it goes down to 365, is it still a good deal? Are you still happy with that? Or are you buying it on weakness? That's the issue I have with selling puts. But great way to make money, as I'll show you. So you're going to sell somebody this put, and it's at $1,765 per contract. Let's basically call it $1,700 a contract before Friday, okay? So $1,700 per contract is if you can get 10 contracts, that's 17 grand in 4 days, okay? And so they're cash secured puts, which means you have to be able to buy 1,000 shares of MicroStrategy. That means you have to have $365,000 in your account to be able to buy MicroStrategy. The other way that you could do it is you can buy a put that's a little bit lower. And that way, if the stock goes from 365 lower, now you start to make money on those puts, and then you only have to put up the difference between the 365 and the 355. I don't want to get into that whole strategy. What I do want to tell you is that I'm an option seller, and so I see an opportunity to make $1,700 per contract right now before Friday. if you like MicroStrategy at 365. Make sense?